Hi everyone, and welcome to another episode of the monthly economic update for the month of March, brought to you by the Economics Unit of the Ceylon Chamber of Commerce. Before starting things off, I would like to ask you all, the Ceylon Chamber along with the UNDP is conducting a tax perception study, and we are conducting a survey for this, and we would like to get your inputs and your suggestions for this particular study. So the survey link can be found in the description down below. So to start things off, the month of March, we had a lot of activities. Most importantly, the IMF-EFF second review was completed and a staff level agreement between the government and the IMF was reached. And the next step on this is that the IMF board approval, and the IMF board approval depends on certain other criteria. And the government, that is the Ministry of Finance, published a government action plan on February 29, 2024, based on the recommendations of the government diagnostic assessment by the IMF. And in terms of the economy, we saw that the economy grew by 4.5% for the fourth quarter of 2023, and overall for 2023, there was a negative growth of 2.3%. And in terms of contribution to the GDP, services contributed 61% to GDP in 2023, and agriculture contributed around 6%, and industry contributed around 25%. And moving on, I also wanted to highlight the public debt as at end 2023, and we see that the external debt has increased slightly to about $37.334 billion, and the domestic debt has increased to about $52 billion. And if you look at the external debt, bilateral debt accounts for about $10.8 billion, multilateral debt accounts for about $11.7 billion, and ISBs account for about $12.5 billion. And what you see here in this particular graph, on the y-axis you have the outstanding debt. And for the year 2025, we had the highest amount of debt which matures in 2025, amounting to $2.1 billion. And we also should look at where the government revenue and government expenditure stands for the year 2023. In terms of government revenue for the year 2023, the government has collected 2.7 trillion rupees in terms of tax revenue. And in terms of non-tax and grants, they have collected about 363 billion rupees. Overall, government revenue stands at around 3.1 trillion rupees for the year 2023. And in terms of government expenditure, it's a little over 5 trillion rupees. Now, if we look at a breakdown of where this government tax revenue comes in from, the inland revenue has collected about 1.5 trillion rupees, the customs has collected 970 billion rupees, and excise has collected about 170 billion rupees. And in terms of value-added tax, I thought of highlighting this as well. VAT as a percentage of total tax revenue has been always hovering around the 20 to 25% mark, and in 2019 this went up to 30%, but with the tax cuts, VAT as a percentage of total tax revenue in 2020 came down to 17.2%, and in 2022 this has again increased to about 26%, and we are expecting that this amount will increase for the year 2023 and further increase for the year 2024. And in terms of PMI, we see that all three indicators of PMI for manufacturing, services and construction has recorded above 50, which is a good sign for all these sectors going forward. And in terms of inflation, we see headline inflation for the month of February coming down slightly to 5.9% from 6.4% in January of 2024, and core inflation is at around 2.8%. The main driver of this inflation is the non-food category sector. And with all these developments, the central bank reduced its policy rates in the month of March during its second monetary policy review for the year 2024 by 50 basis points. So with that development, SDFR stands at 8.5% and SLFR stands at 9.5%. And on the external front, I thought of highlighting this. The Sri Lanka and Indonesia have officially commenced preferential trade agreements. And this is viewed as a step towards a more comprehensive free trade agreement with Indonesia going forward. And in terms of merchandise trade, for the month of February, we see that exports have increased from January, where in January exports was around $970 million, and for the month of February it was at around $1 billion. Still slightly lower than the 2022 mark, but significantly higher than the 2023 mark. And in terms of monthly imports, February monthly imports came down compared to January, and February monthly imports are at around $1.3 billion. This is significantly lower than the 2022 mark. However, it's higher than the 2023 mark. And with these developments, we see a gradual increase in the trade deficit when you compare Jan to Feb 2023 to Jan to Feb of 2024. And in terms of trading services, what we see mainly are earnings from tourism and worker remittances have improved significantly compared to 2022 and 2023. From Jan to Feb 2024, already worker remittances inflows has amounted to close to $1 billion. In terms of tourism earnings, from Jan to Feb of 2024, it has closed upon to $687 million of inflows. And in January, February, and in March, it is expected that more than 200,000 tourists will come in March. Jan and February have also posted more than 200,000 tourists coming in. And moving on from there, the foreign reserves at the Central Bank of Sri Lanka have significantly improved to over $4.5 billion. And with all these developments in the external sector, we see the LKR appreciating against the USD by around 6.7% for the year 2024. And if we shift our focus to the global arena, we see the global federal reserves and the central banks of US, EU, UK all holding their policy rates steady at the current level, and they are looking at cutting rates for this particular year for the future to come. And I also thought of highlighting this aspect as well, the fragility in the global supply chains. We all know what's happening with the drought in the Panama Canal, and also at the missile attacks on Red Sea shipping by the Houthi militants. And we also saw very recently, 2 days back, how the Baltimore's bridge collapsed after a container ship hit the bridge, which was heading to Sri Lanka. So it is important to highlight how fragile our global supply chains are as well. So this is a little bit of an overview of the domestic and global economy for the month of March. We hope to see you for a monthly economic update for the month of April. Thank you for tuning in.